Welcome to our look at the week ahead. The health of corporate America will be the main driver of market sentiment over the next few trading days. Europe's economic woes will also come under the spotlight as some of the region's biggest companies also report their results. The numbers which have come in so far haven't been exactly sparkling, but the general consensus seems to be that the figures could have been a lot worse. Bellwethers as diverse as Apple, McDonald's, Barclays and Royal Dutch Shell will tell their own stories next week. But the rise of nearly 5% in the MSCI's World Stocks Index so far this year is a lot more robust than many analysts had been expecting. Justin Urquhart-Stewart of Seven Investment Management says policymakers need to do more on the macroeconomic front.
The next quarter is likely to be lower and slower. Not bad, but companies are coming up with good cash positions, better dividends. That's very encouraging. But there's one word missing, that vital word in any economy: confidence. If you haven't got confidence, we don't spend as individuals and companies don't invest. That's where you come back to that lack of credible political leadership again. Some proper leadership will encourage those companies to start investing and actually making sure we can get some more growth back into the economy.
Meanwhile, be selective is the message from Virginie Maisonneuve, head of global equities at Schroders.
I'm still quite underweight financials. I do not have any peripheral financial banks. I'm still quite comfortable with some of the core US names as well as some of the Asian names. And in Europe, as I said, I'm very cautious still.
Well, countless companies are looking to Asia and China in particular to drive their prosperity in the future. Those hopes are looking shakier than they were after China's growth slowed to its lowest in 3 years. HSBC's manufacturing PMI coming out on Tuesday will be closely watched. Last month, the index came in below the 50 level, which indicates falling activity. Clues to the health of Europe's biggest economy will come on Wednesday when Germany's IFO Institute publishes its monthly surveys on business confidence. All three of the main indexes are forecast to decline this month, but the IMF is striking a more positive note. The fund is predicting economic growth of 1% in Germany this year and 1.4% next year. There's a gloomier outlook for the UK. Second quarter GDP, also out on Tuesday, is likely to show another drop, extending the recession which Britain slipped into at the turn of the year. However, there is something on the horizon which economists polled by Reuters say should lift the UK back into growth. Just in case you hadn't heard, the London 2012 Olympic Games get underway with the opening ceremony kicking off at 2012 hours on Friday. The budget of £9.3 billion, already more than triple the original estimate, raising concerns about the cost of the event. The fiasco, which has seen the security group G4S fail to recruit enough staff, means British troops have been grafted in to guard the Games. London's already stretched transport network is another worry, and organisers are hoping there won't be any more embarrassing failures to divert world attention away from the actual sport. Well, that's our look at the week ahead. Follow all our shows on Twitter @Reuters Insider. I'm Nigel Stevenson. This is Reuters.